presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Al in Homosassa. Hey, Al, what's going on?
Isn't it wonderful? This gentleman here with the gold report, right before the market fell apart, ended up with PAAS. We had a 98% gain in a year. And, you weren't 99% proof like Irish whiskey, but we had a good gain there. You always told us to do what we feel comfortable with. And if I lose a little bit of money on the table, I will, but I know that I just pocketed $8,000 or $9,000 in 2 weeks.
That's a beautiful thing, man.
Now, Tom O'Brien.
Welcome, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. Man, a lot of freaky stuff to talk about today. Mainly, Bitcoin and these different kind of instruments that exist to get exposure to Bitcoin, what they do. Bitcoin has breached 100,000 yet again, which is unbelievable. You're up 5.2%. right now, which is, again, just really, really impressive. I guess, really there's just probably so much liquidity, I guess, now there's been a lot of adoption, or at least discussion of adopting Bitcoin, at higher levels. So this isn't just, retail people getting in, but it really is impressive. Everything is chugging along like there's not any real problems whatsoever. So take that for what you will. Super interesting, no doubt. Take a look at $101,675 for one Bitcoin right there. Folks, today we're going to be joined by Tim Ord of the Ord Oracle. Additionally, we have Larry live trading. I know it's weird, but technically the first Friday of the month was also the first, day of the month. So this is technically the second Friday of the month. So come on through for live trading with Larry Pesavento. How are you going to do that, Jacob? How do I do that? I'm going to tell you right now. You're going to go to TFNN.com. You're going to wait for your bandwidth. Okay, and then you're going to check out Larry live trading Fridays. Just go ahead, hop in there, you grab it. That gives you 2 live trading experiences. Okay, so that price is for 2. Then the second one should be, what are we looking at? The 23rd. Is that right? Yeah. Yeah, that should be correct. Okay, yeah, so the 23rd, and that'll be his next one. And listen, this market is nuts. All dips are getting bought. We are playing like nothing ever happened. Okay, so that's what we got going on right now. Taking a look at some stuff. Of course, you have MSTY, which, they call this yield max. Essentially what this is doing is it gives you dividend payouts on Bitcoin, right? Is the idea. There's a bunch of other things going on right now. SEP, for instance, which, again, I'm not really sure, why it's trading at these multiples. This is probably a 3.4 time multiple, considering how much Bitcoin that they have exposure to. So it's, I believe they only have 2% of 44,000 Bitcoin, which is giving you a multiple of 3.4. So net asset value for this, I believe, is about $10.12. Whatever, right? Let's just buy it. That's not me actually saying that, but that's just kind of how people are thinking. MSTR soaring, coin soaring. Whew. This thing, 5.73%. Yeah. Okay. It's really amazing. I'm kind of considering looking at iBit when the thing was just, I don't know. I think probably what needs to happen is this weekend I am going to meditate and, think about what the heck just happened in this market and why we're recovering at these kind of levels. Now, yeah, listen, earnings were good for a lot of companies and things are still chugging along. You take a look at AppLovin. Okay, money is still being spent on advertising. There's no contraction. Okay? Look, you're 13.09% right now in AppLovin. Of course, they're also selling one of their bad sectors of the business that just kind of loses money. I believe that's like an app store or like a game store, something along those lines. The point of AppLovin is what you want is their advertising revenue. Okay, so we're getting very close to closing, at least touching this, closing this gap here. And then we have this next one to go with AppLovin. But fantastic kind of movement for them. People are still spending money. Taking a look at the trade desk, kind of in the same realm. You're up 6.95% today. They have earnings as well. Of course, they had a pretty interesting miss, only about 2% on revenue, but you have a high PE, and the forward PE is also high for the trade desk. What else happened? You know, they have this AI tool called Kokai, and that rollout has not been as successful as people had anticipated. It's taking longer to get it out there. And I haven't really seen any news on Kokai since then. Additionally, okay, they didn't really provide forward guidance in a major way for Q1. There's a lot of uncertainty. Of course, they did guide down a little bit for revenues, but as far as like net income is concerned and all that, they didn't provide outlook at that time. And I think it spooked people. And this was a pretty large sell-off, right? So, yeah, we'll see. We'll talk some more about Trade Desk, of course, going forward within the show. Take a look at the SPY, you're up 1.21%. Take a look at the composite, you're up 1.73% at 18,045. Dow Jones Industrial roaring. Russell Futures up 2.18%. Again, Bitcoin coming up hot. Crude, nice little whipsaw today, again, up 3.15%. Gold contract coming off in a major way, okay? This is, again, one of the weird things I was concerned about with gold is that if everything improves elsewhere, this is going to be a source of liquidity. It can just, you know, this is like a double top, right? It's having a hard time getting back up to its all-time highs there. So we'll see if that continues. Most likely this stays in a certain trading range, right? We don't give up all the gains from, you know, the beginning of the year, but you just don't get that kind of fuertes going forward with it. Silver off 0.66. Copper coming off 1.41%. Taking a look at the 10-year, if I can pull that up. Probably, I don't know, unchanged, right? I mean, everything's going okay. We're not getting cuts. Yeah, 4.375%. Woo, that's hot. Getting close up to that 4.4%, but this is kind of normal trading range for that. Steel Dynamics off 0.93%. You have Tesla ripping up 4.06%. You know, I just... everything just seems a little bit hot again. Like, you know, I really didn't like Tesla's earnings. And again, you know, we give them some kind of grace, but it seems like bookings in Europe like are down for sure. They have a lot of competition with their full self-driving. You know, I mean, even Palantir, it's like, oh, excuse me, that's not Palantir. We're right back up. It's like it never happened. It's a freaky pattern. That's what a lot of the market was doing before this massive sell-off. So, I don't know. You know, it's very hot right now, this whole market. A lot of exuberance. Every dip is being bought. Stay right there, folks. We'll be right back with Tim Ord after the break.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, everybody. This is Jacob Shoup. You watched Tom O'Brien Show. You just saw me touch the mic, which is a no-no in the biz. We're going to have Tim Ord on here in a moment, waiting for his charts to get up, shared in the den, taking a look Shopify off a little bit. Man, and you know, I didn't kind of go over this, but the trade deal, okay, signed with the UK. Okay, so slash tariffs on UK-made vehicles from 25% to 10%, 100,000 vehicle quota, or granting them a 100,000 quota. UK reduced tariffs on American beef to near zero levels and pledged to purchase $10 billion worth of Boeing. Trump confirmed the 10% tariff would remain the baseline for now, though he suggested other nations with large trade surpluses should expect higher rates. We'll kind of go over that, you know, how much the US and the UK trade with each other. You know, it's nice to see at least some kind of deal. You know, it's, again, not China or Europe, but, you know, it's movement forward, right? And then Trump says, you better go out and buy stock. So whatever. This is why the market's, you know, rallying like this. And like I said, every dip is getting bought, you know? So again, we're going to discuss a lot more of this going forward within the show, but it is, of course, a Thursday. So you know what that means. Every Tuesday and Thursday, we are joined by Tim Ord of the Ord Oracle. You can go over to his website, ord-oracle.com. You can check out the newsletters tab, the book tab there. You can contact him as well. Additionally, you go to the services tab of TFNN.com. You can see two fantastic webinars from Tim Ord that he did for us over at TFNN. That's the Secret Science of Market Tops and the 6 Secret Ratios Every Trader Should Know. Tim, how are you doing?
Good. You got my charts?
I do. The charts are looking great.
All right. Well, we're going to go through this. This is updated again. See, we're not starting to rally from what I can tell. Even though we're rallying today, I don't think we're going to go far. We really just don't have the panic, which is basically energy for the market to continue higher. The top window is basically the 10-day. That's kind of the key indicator, actually, the 10-day and 21-day. These are all shorter top ones. The 10-day at 106, ideally needed around 120. So, you know, we're just not there. This is a 5-day trend right here. Again, we're below it's 103. One below that, it's a 2-day trend. That's close, 1.16. Not bad. But it's 2 days. No, you know, it's 2 days of trend reading, not really that great. Then they got the bottom window 3-day trend. All in all, I mean, it's not bearish, but it's not really bullish either. So you gotta, and that's what the market's kind of reflecting here. It just, you get some news comes out, pops a little bit. I don't think we're going to go far, and I'll show you why. This is the weekly charts. The monthly charts rule the weekly rule the dailies rule the hour, and all the way down. And today I made this chart, but we touched this high today, which is basically pretty close to 570. That's where this high was. And so once you touch a previous high, you have to actually touch it. You can't go right below it. You have to touch it. And volume's 10% lighter than that previous high. So this week here, you're testing this week right there. You compare the two volume. You can see this volume of March 31st is about double the volume of or April 29th. So you don't have enough energy to get through it. And now we're testing this week. We're testing yesterday's or last week's high. Yeah. And volume has to come in, if it puts this way, if it comes in 280 million shares or less this week, we got 1 day to go, which is tomorrow. You have to look at the weekly charts to find on the close what the weekly volume is. And if it comes in 280 million shares, which is basically 10% lighter than this week, then you're going to have resistance. And so we're banging against this high. You tried to get through it last week, couldn't do it. Now we're trying to get through it this week. And if volume comes in 280 million shares or less, this is going to be resistance, and you're going to go back to the previous low. Well, previous low is last week's low. And if you touch that low on at least equal volume or higher volume, you go down to the next low, and so on. So I think the pullbacks are still in the cards on the weekly time frames, because the dailies are really mushy right now, not giving me a really good signal. But the weeklies are clear, especially if tomorrow we come in 280 million shares or less. We're going to pull back because we just don't have the energy to the upside. And here's the dailies. You got a 3-gap play going to the upside. The market's trying to rally. We're actually touching this high here, which is basically, it's basically this high on the weekly time frames. But anyhow, this is on the daily. You did touch that high here earlier today, and volume is probably going to come in about equal, so I'm not sure what that means. But again, on the weekly time frames, to get through a previous high, they always have to say, they have to have a sign of strength. Yeah. A sign of strength means you got to have at least equal volume, if not higher, going through the previous high. So if you have 10% less than the previous high, you don't have a sign of strength. You just got a test of previous high. So I think that's what's happening here. I still think we're going to pull back, even though this week's been a non-issue. It's just pretty much a sideways week. I don't know what tomorrow's going to bring. It may try to stay up, it may not, but I'm not seeing the volume studies come in suggest this rally has any legs. So if it's not going to go up, it's going to go back down. So ultimately, I think we're probably going to end up sometime later this month. We're going to see 510, which is basically this low. I think that's where we're going to go. There's a gap down there. This is a previous low that may be tested, which is April 21st. So we'll see how that works out. I don't have enough confidence to really get a buy signal here, but I don't have enough confidence to go short here either. So I'm just kind of wait until another clear signal develops. So not doing anything. GDX, on the other hand, is doing stuff. Maybe I'm going too fast here, but
no. Yeah, and seriously, guys, if anyone has any questions, please put them in the den. There you go. Actually, Tim, regarding just going to look on the SPY. We actually do have a question. If you use ABCs, and do you recognize the 1 to 575? The price, like 5,750, I would suppose, is what he's referring to.
575 up there, you mean?
Yeah, that's right. So he's looking at an A to B, C to D, and if you look at that when you're considering in the SPY, yeah.
Well, I do a lot of ABC works, but I do the volume studies in the ABCs, and I look at, 5 counts, Elliott wave type 5 counts and stuff too. But, if you're doing the ABCs, we actually have an ABC down from the top of, I think it was April or March, wherever that top was. And so we only went down in an ABC. That means that's just a correction wave in an uptrend, because impulse waves goes in 5 counts. ABCs go in trend counts. So ABC down means you got another at least 5 count up. So I'm thinking we made this April 7th low at the bottom, but as far as ABC up here, I'm not sure that 575 really means anything. I'll put it that way. Don't know if we'll get there or not. I don't think so. I think we'll stop right around where we are right now.
Understood. Yeah, and folks, if you have any other questions for Tim, you can ask them in the Discord, or you can do so on our YouTube channel. Tim, please stay right there, folks. We'll be right back with Tim Ord after the break.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the 2nd and 4th Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. We're joined right now by Tim Ord of the Ord Oracle. Check out his website, ord-oracle.com. We got the SPY trading up 1.41%. at $569. And then looking at the GDX, which we're about to speak to, off about 2.03%, trading at 48.82. Tim, what are we looking at with the GDX?
Right, it's kind of we've talked about this before. The GDX is the three drives to the top pattern. The second high has to retrace at least 61.8% of retracement of the previous rally up, which it did. It did a little more. You went volume to increase, showing that energy to the downside was increasing, and it did. If you had a big volume chart down here, then you rally up to the final high. Sometimes as high as double top, sometimes they're not. You don't know where it's going to be. But anyhow, three drives at top have a downside pattern to where it began, which is around 39. I think everything's kind of working out. It's taking us time to go where it needs to go. But we're up big yesterday. Today we're kind of, I don't have a chart right in front of me right now, but we seem to be pulling back here. This is more divergence. This is GDX in the top window. I did this earlier today, but what's going on right now, if you notice, the market made higher highs right here. And if you notice the bottom window is the cumulative GDX up-down volume. So that's the up-down volume. Next one higher is the cumulative advanced decline for GDX. Yeah. These are all for GDX. The volumes for GDX, the advanced decline, since it's an ETF, is for GDX. So it shows there's a weakening advanced decline in GDX, and also there's more down volume than up volume, even though GDX made a higher high. So that's a major divergence. And I don't really try to use this. I use these two bottom charts as to define the trend. It doesn't really try to pick out the tops or bottoms, but once you get in a trend, these two indicators are really good defining how that trend develops. When the trend reverses, it needs to get from up to down. It needs to get down below -10. And today, if you notice, we're at -6 right there, and this is a little over almost 7. So we need a break below -10. And that's probably what's going to happen here over the next day or two. And that is, even though GDX is pretty much selling close to its highs, these two indicators, if they get down below -10, which like probably will, suggest that the trend is changing from up to down. So it got back up in January of 2025, and it looked like we're probably going to start going bearish sometime here in the next several days. So this defiance, it haven't quite got there yet, but if you notice, we broke a new low on both indicators going back to March, because we're lower now than we were in March, even though GDX is higher. So it shows the internal of GDX. Shows the internal is actually weakening here, because it shows a weakening advanced decline, and it shows the up-down volume, showing more volume going to the downside than the upside. So even though it's not showing a lot of weakness price-wise yet, it's probably going to come here pretty shortly. But 39 is going to be the big, I think, the next big buy area. Okay. So we'll see how that happens. But GDX, in my opinion, the downtrend has started, even though we really haven't gone much down so far. Trend following indicators are definitely weakening here. So not the time to buy. This is the reason why we got out back in, I forgot what day that was. We were on the radio, so that was mid-April. Yeah, we're talking about, I said around 50, maybe 52. It did get out almost to 53. It's hard to pick tops. Bottoms are climatic. Tops are kind of, you think you got it, and it goes a little bit higher. But this is the reason we got out. This is the monthly chart, GDX, going back to 2008. And you can't really see it, but we did get way above the upper Bollinger Band on the monthly time frame. That was one reason why. Another reason why is the RSI got over 70. Matter of fact, it's still 70 right now. We're almost 71. So that's another reason why we got out. And it's still up there. So support, this chart pretty good here. It got support around 39, which pretty much close to the previous highs. I think that's where we're heading. Bigger trends up. This is just a timeout in an uptrend, so I don't think you have to worry about it, but it's not really the good time to add positions right now, I don't think. But when it gets to 39, which nobody will want to add, will be the time to add. So you buy in fear, you sell in euphoria. And so we're starting to go to the fear stage now. We haven't reached it yet, but we're pretty close getting there. Or the fear stage is when you want to buy, and so far we're not very far. We're quite a ways from it yet. So, but when the fear starts, you'll be hearing about it, how bad it is, and all this other stuff. And we'll show you indicators how to pick out the next low or get close to it. So, anyhow, that's that.
Perfect. And Tim, I know you might not have any charts on it today, but are you seeing anything with silver as well? Are you expecting it to kind of follow the same trajectory, at least like the miners are following here?
I think, I do the actually silver-gold ratio. There's a gold-silver ratio. I do the other way around. The reason why it seems, it just works out. But, silver is just rock bottom.
Yeah.
The price of silver compared to gold is rock bottom right now. That ratio really doesn't get any lower than it is right now. I don't have that chart in front of me. But if silver is a rock bottom relationship to gold, that would imply silver is probably a really good buy right now. History shows that when silver stocks outperform gold stocks, that's usually what happens in bull markets. And so far, gold stocks outperform the silver stocks.
Right.
So either we're way early in this stage of a bull market, and silver stocks are still way ahead of us when they start to outperform. That would put quite a long time limit for this bull market, because silver right now is just rock. The ratio is basically setting at a rock bottom,
right?
Going back for 15, 20 years. It's just sitting at the very lows. So I have some silver stocks in my portfolio, and they're doing okay, but they're not doing as good as gold stocks. So, but actually, gold stocks, I think they're going to start motivating here to the upside.
Oh, for sure. Some of the smaller junior miners have also really picked up in some major ways too.
Yeah, that GORO.
Oh yeah,
that is starting to perform. I hear the music already.
Well, Tim, was that the last chart you had for GDX?
No, I want to talk about this one here.
Oh, fantastic. Well, Tim, please do right there, folks. Stay right there. We'll be right back with Tim Ord after the break.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everybody. Jacob Shoup, watch the Tom O'Brien Show. We're joined right now by Tim Ord of the Ord Oracle. Tim, I know we have one last chart to look at. We have some questions in the den. One of them, someone asked, Jacob, please clarify. Tim thinks miners should be bought sooner now. Wait until GLD down to 39-ish. I know you were saying we're waiting for, that movement back down to 39. But then we were talking about Goro kind of waking up, and same with VGZ. Kind of the way I'm thinking about it is, the individual stocks will definitely do what they do, the individual miners, but the whole aggregate is still kind of in this potential downtrend. Is this kind of the idea? And they really wake up individually and as a whole once the GDX kind of can recover from that $39 position.
Is that what you're asking?
This is the way I answered him. If you have anything to add or correct about my kind of answer for him on that.
No, yeah, I mean, some of these stocks are actually probably going to just do fine.
Yeah.
Especially the ones that are in basing right now. They're not going to go down anymore because they've already been basing for the last couple of years, and they may start going up. But I guess the new minings of the world and AEMs and all those stuff, they'll probably pull back with GDX, but not necessarily the ones that are in the basing period are just starting to come off the bottoms. I mean, if they give a clear buy signal, I wouldn't hesitate to buy them. I'll put it that way. But in general, this whole market's due for consolidation. We've been running since January.
Sure.
So, what's that, 4 months up, so a month or two down here, and probably some sort of a bottom in June or July. Yeah, that's what I'm thinking anyhow, is where the next rally will probably start from. So, what you said I think is right. So,
okay.
There's no danger, I guess, of a top of any consequence. I can show that chart. Matter of fact, I'll show the chart next time. The monthlies remain on the buy signal. So this is a consolidation and an uptrend. So you want to buy the pullback. So I don't know. Does that
Understood.
clarify everything? Yeah. All right. Anyhow, this is what I think is developing on the bigger time frames. We've gone over this chart before. I think it's really the whole key here is this RSI. In downtrends, it stays below the 50 level, which it did from 2012 until just recently, 2020. It looks like about August 2020. Well, it got above 50. We're at 60 right now. And that's what you want to hit. You want to hit a high number coming off and pushing this RSI way above the previous highs. Well, the previous highs on RSI was basically 50. So you're up around 60 right now. So that's initiation of an uptrend because you had a surge of strength off of a base period. So this is a sign of strength. And so once you get way above 50 where it is now, it's probably going to stay there. So RSI in general should now, going forward, how long is hard to say, but previously we had 12-year cycles. 2000 to 2012 was an up cycle. From 2012 to 2012 to 2024 was down cycle. Compared the HUI compared to the NDX. So what that said is an uptrend, when this RSI is above 50, that means HUI is outperforming the NASDAQ. When the RSI is below 50, that means HUI is underperforming the NDX. In my opinion, going forward here, because every dog, but if this has its day, and really the big dogs were the gold stocks. They did, horrible over the last 12 years, especially over the last couple of years. And so now they're all starting to wake up. And as long as this RSI going forward stays above 50, that relationship where HUI will outperform MDX will stay in force. So I'm thinking this is a big cycle going up. And will it last 12 years? Well, it could. I don't know. We'll have to wait and see. But the place to be right now compared to the NASDAQ, or you can actually compare it to the SPY. But NASDAQ's actually outperformed the SPY. That's what happens in bull markets. So this ratio will probably be even more dramatic to the upside if we compare the HUI to the SPY, because SPY in an uptrend compared to the NASDAQ and the SPX, NASDAQ and uptrends outperform the SPY. So anyhow, equity markets we're probably going to underperform the gold markets in general. So this is going to be probably a hot issue going forward. So what's that mean? I guess inflation is going to be sticking around for a while. So we'll have to wait and see how that happens. But this is probably the last opportunity you had to get to buy stuff cheap was back in 2000. And I think we got that opportunity again. So a lot of these gold stocks, I think that one GORO is going to be a double figure gold stock at some point. Right. It's a long ways from it right now, but it seems to be showing all the signs it's supposed to, that initiation of out of the bottom. I mean, it's got a long ways to go. What's the exact price, how high it will be, I'm not for sure. But I have quite a few other ones too. But anyhow, this is to remember. So if you're in the stock market, this is probably one area you should, take a look at. So we'll see how that turns out as we go forward. If things go wrong, though, I guess you might say, if this RSI goes for some reason down below 40, or really gets way below 50, that would be a concern. Sure. And I don't know if that'll happen or not, but if it does, that would imply the gold uptrend compared to the equity market has ended. And so we'll have to see how that happens, but I don't think that's going to happen for a while. So anyhow, I want to kind of illustrate this because this is really an opportune time to buy pretty much penny stocks that could really perform going forward. So you don't get that opportunity very often. So
fantastic. Well, Tim, thank you so much. Always phenomenal insight. We'll see how the SPY shakes out today with the volume. Again, just this has really been like a fascinating kind of experience the past month.
Yeah, I'm looking at the SPY now in another machine. Yeah. And what we're doing, we're testing a previous high of last week. Yeah. And then that high, you're testing a high of, it looks like a April 3rd or April 2nd, I don't know. But anyhow, this is where the sign of strength is supposed to show up. Right here, right now, at those highs, and it's not doing it. So this is where volume should really pretty much be double what it is right now compared. So you have to have a sign of strength through the previous highs, and we're not seeing that. So that's the reason why I'm not really bearish, because the volume's about equal to the previous high of last week, but still way low compared to what it was of the previous high of early April. So I'm not sure what that means. It might mean just more mush going sideways here. But this is not a bullish sign because we don't have a sign of strength through that high. So, but it's not real bearish either. So
yeah, I can definitely see some chopping around as well. Well, Tim, it looks like we might be wrapping up here going into the break. I think the music should be playing here pretty soon. But thank you so much for coming on again, and then we'll see you Tuesday. And there's some.
All right, thanks a lot.
Thank you, Tim. Folks, if you stay right there, we'll be right back. We got a short segment to wrap up the show.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everybody. This is James Shoup, watch the Tom O'Brien Show. We were joined by Tim Orr. It's always fantastic having him on. Really kind of enjoy that twice a week. I think it's just good to get other insights as well. And of course, he's been in this game for a long time. Take a look at the spikes. A little bit of a sell-off right now. Trading up 0.82%. Getting up roughly about 3 points since the show began here. Trading at 565.64. You get the composite trading up 1.22%. Same kind of deal. Okay, 214 points to the upside right now. Currently starting at 17,954. Dow Jones Industrial trading up about 0.75% at 41,405, with those Russell futures up 1.9% at 2,033 right there on the dot. Take a look at the dollar. Some strength right now in the dollar, especially after the deal made with the UK. Okay, so like with that, let's see. A trade deal will significantly expand U.S. market access to UK, creating $5 billion opportunity for new exports for U.S. farmers, ranchers, and producers. $700 million in ethanol exports, $250 million in other agricultural products. You know, does that necessarily, shoot the SPY up, what was it, 7 points with the extra $5 billion coming in there? Like, maybe not necessarily. I think a lot of this is probably people saying, hey, look, this is indication that we're getting deals being made. Of course, you're getting a sell-off right now a little bit. there's this conversation that he will reduce the tariffs on China from 145% only to 50%. That is still, effectively really constricting on trade. I don't know, but you can't argue with you've had you've had a strong week, right, to the upside. Every dip is being bought. Okay, listen, you got TDD coming up after this. Their big thing that'll be in focus. The reason why I don't want to get any exposure to this is because of how poorly Kokai, their AI platform, went. We'll talk a little bit about that at the 4 p.m. stock market update. I'm concerned that it's not stabilized yet. Stay right there, folks.
Building